Hello everyone. So welcome to the part 6 of this series of videos which I am making on a single problem, that is this problem 4.8a from the financial accounting textbook. Okay, so this is a part of the playlist. If you're directly seeing this video, so please see the previous videos in this particular playlist. I will try to leave the link to the playlist in the description. And we have been working on this problem for 5 parts, I believe, and now this is the 6th part. Okay. So already we finished journalizing entries, posting to ledger, preparing trial balance, journalizing the adjustments, posting adjustments to the T accounts, and preparing the trial balance and preparing the finalized statements. Now, finally, journalize and post closing entries and complete the closing process. So let us do this closing process by journalizing. And then finally, last part is prepare post closing trial balance. Okay, so now again, so we have the classified balance sheet, we have income statement, retained earnings statement. That means in this entire cycle, we started off with one. So 1, 2, 3, 4, 5, 6, 7 steps are completed in the previous videos. Now we are doing the final step, that is the closing entries. Okay. Now what is the meaning of closing entries? So you look at the adjusted trial balance, and there are some accounts which are permanent accounts and some accounts which are temporary accounts. So the temporary accounts we need to make zero balance so that it will become closing. That is called the closing process. Okay, so now what are the temporary accounts and what are the permanent accounts? Again, if you are seeing the my series of videos, in one of the earlier things I have explained. Okay, so red ale, okay, revenues, expenses and dividends. Revenues, expenses and dividends, these are temporary accounts, whereas assets, liabilities and equity, these are permanent accounts. So red ale is the shortcut to remember that. So revenues, expenses and dividends, if you look at our trial balance, if you see up to this entry number 10, we have up to 10 we have retained earnings, then dividend is there, then income summary is kind of revenue only, so revenue, and then all our expenses. So if I can make a line here at 10, so the above are permanent P and below are temporary T. So these are all temporary accounts. So these temporary accounts I want to make zero balance. So that is what is called the closing process. Okay. So how to do that? So again, if you had seen one of my earlier videos, I have explained how to make the process. Okay. So first, how to do the closing entries? First, make revenues equal to zero. How to make revenues equal to zero? By merging them into income summary or by transferring them into income summary. That is the first step. Second step, expenses to zero, again get them into income summary. Third step, income summary, make it into zero, get them into retained earnings. And finally, dividends you remove from retained earnings. So finally, whatever is the retained earnings, that will be your closing entry. Anyway, so let's do this step once again. So already we had solved some problems before. So let's come back here and then let's do the closing entries. Okay, so I will use this space. So let's use a different pen. Clean window, washing ink, and then I am saying closing entries, closing journal entries. And you already know the format of journal entries. What is the format of journal entries? Simply date, account, debit and credit. Now what is the objective? To neutralize or to make the temporary accounts into zero. Now if you go back to our general ledger, very nicely, see what we have done. If you look at the left side of the general ledger, this is an asset, this is an asset, this is an asset, this is an asset, 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 and accounts payable is a liability, salaries wages payable is a liability, common stock is also liability, and retained earnings is an equity. So up to here. Now remaining all are temporary because this is dividend, this is revenue, this is income summary, expense, 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 and expense. So what is all there in the right side? If I make all these right side accounts as zero balance, then my what you call closing entries are done. Okay, so that is the idea. Now if I go back, let's look at the first step. Okay, so what is the first step? I need to make the revenue zero. Okay, so let's again refer to this diagram. Yeah, so the first step is to make revenue zero and then transfer them into income sum. How to do that? Okay, so here look at the revenues. So the number 13 service revenue is the credit balance of 7900. So if I make a debit balance of 7900, then credit and debit will cancel each other. Okay, so that is what I will do. Service revenue 7900 under the debit. So this 7900 under the debit will cancel this 7900 under the credit, and service revenue becomes zero. Okay. So but then I need a matching credit entry, so that is what is income summary. Next, first step is done. So this is again 31st July. Now this step is done. Let me again refer to the diagram. I'm sorry if I keep on turning pages, but I hope you get it. So now this part is done. Now expenses to income summary. Okay, so now what you have to do, if you look at the expenses in the trial balance, see all the expenses are under debit balance. So if you give credit, then it will get cancelled. Okay, so first keep the income summary for the debit entry. If you don't know what is the debit entry, but now let's do all the expenses. Okay, what are the expenses? 5 expenses: maintenance and repair, supplies, depreciation. So maintenance and repair expense, supplies expense, then depreciation expense, insurance expense, and finally salaries and wages expense. If you notice, these are exactly same, all the expenses are same as we listed in the income statement, same items. Okay, so I can now see these in the trial balance, these are in the debit side. Now I'll put the same amounts in the credit side. Okay, so what are the amounts? So let me fold it like this. So 290, 580, 180, 150, and 2400, and the total expenses according to income statement is 3600. So that I will keep here as a debit entry. So debit entry is under income summary, and all these expenses comes under the credit entry. So the effect of this is that all the expenses goes to zero because the credits will cancel those debits. So now what is the balance in the income summary? So if you look at the T accounts, okay, so let me use a red pen now. See, income summary is having a credit balance of 7900. So let me go back to my T accounts and I will post it. So income summary has credit balance of 7900, whereas the income summary here has a debit balance of 3600. So what is the balance of income summary? So the balance is 7900 minus 3600. So I'll get 4300 as the net income. Okay, so this is the income summary 4300. This is under the credit. Now because the income summary is under the credit, if you want to cancel out this, we need a debit entry of 4300. So that is what I will do, the next entry, that is again 31st. Income summary 4300 I am making under the debit. So this 4300 will cancel this 4300. Okay. Now what is the matching credit entry for this? That is retained earnings. So 4300. In effect, we are transferring the income into the retained earnings. Now meanwhile we have dividends. Okay, so the last part. Okay, so dividends, if you look at dividends in the trial balance, so the dividends in the trial balance is under the debit, so it has to be credited to cancel out. Okay, so therefore I'll get retained earnings as the first entry, 600, and then dividends 600. So this process will cancel out the dividends. Okay, so finally if you again go back to the diagram which I had drawn sometime in one of my previous videos. So we completed 1, 2, 3, 4. Okay, so one is revenues, we made it into 0, transfer to income summary. Expenses, we made it to 0, transfer to income summary. Income summary, we made it to 0, transfer to retained earnings. And dividends, we removed from the retained earnings. So whatever we finally left out is with the retained earnings. So these are the closing journal entries. Okay, so the closing journal entries is completed, what you see on the screen. So that is the part H. Okay, so journalize and post the closing entries and complete the closing process. So let us post the journal entries to the general ledger. Okay, so already I have posted these two, income summary here and income summary here. So let me go back. Service revenue has a debit balance of 7900. So I'll go to my general ledger. So service revenue has 7900 on the credit. So now I'll go here 7900 on the debit side. So debit and credit, the overall net balance will become 0. So service revenue has 0 balance. Next, income summary, already we have done it. Now there is one more income summary of 4300 here under the debit. Okay, so that is what I will do here. 4300 under the debit. So these two will cancel and finally the balance will become 0. So income summary is also closed. So this is done. Next, these expenses. So credit side. Okay, so all the expenses. So 290, credit side 290. So balance will become 0. Supplies 580 debit side, here credit side 580, balance will become 0. Depreciation 180 on the credit side, balance will become 0. Salaries and expenses 2400 on the debit side, so 2400 on the credit side, and balance will become 0. Insurance expense, balance will become 0. So all my expenses have become 0 balance. Finally dividends, if you see, so these all are I have considered. Now dividends, if you see, credit is 600. Okay, so here debit is 600. So here again dividends become 0. Now only two entries are remaining, that is retained earnings. I have one entry under credit 4300. So 4300, and one entry under debit, that is 600. Okay, so here debit 600. So what is the balance under retained earnings? So if you see balance, so 4300 minus 600. So I'll get 3700 of credit balance. Okay. So now if you see, all these things are zeros, this whole page. So only except the retained earnings of 3700, and then this side, because these are permanent accounts, there is no change in that. Permanent accounts as it is, and the what you call the temporary accounts have changed. So now this process is completed, that is journalizing the post closing entries and completing the closing process. So we completed the closing process. So finally one point is left, prepare post closing trial balance at July 31st. Okay, so let us do that and we'll be ending it. So let me write it here. Clean window washing ink, post closing trial balance. So this is on 31st July 2014. Okay, so now it will have again, what is the format? So simply accounts and then debit and credit. Now this will have only 10 entries as we had seen earlier. So what are the 10 entries? The 10 entries are all these P, permanent entries. Okay, cash, accounts receivable, supplies, all these things. Whereas this dividends, income summary, all these things have anyway gone to zero balance, so we don't have to write them. Okay. So let me transfer this 10 entries from here to here. I'll do it in a moment. Here we have the all the 10 permanent accounts, okay, directly taken from here. Now again, the first 9 entries will remain same. There won't be any change. Only change will be in the retained earnings. So first 9 accounts as it is I will copy. 54106300. So here we have $54106300. Then supplies is at 320. Then prepaid insurance at 1650. And equipment is at 8000. Then accumulated depreciation is a credit balance of 180. Accounts payable 5400, and salaries and wages payable 400. Then common stock of 12,000. Now only difference now is the retained earnings. Here it was 0. This was 0 because this is not as of 31st July. This retained earnings was as of 1st July. So now we consider all these transactions, then the retained earnings, the closing process, retained earnings has been updated. In fact, if you see the retained earnings statement also, the same thing we can see 3700, whereas the our closing process also you can see retained earnings stands at 3700. So I'll put 3, and that too on the credit side. Okay, so 3700. That's it. So now I need to calculate the balances. Okay, so let us see if the balances are matching or not, and based on that we will come to know. Okay, so 180, I'm adding the credit balances 5400 plus 400 plus 12,000 plus 3700. So I'm getting 21,680. Okay, so this is the total on the credit side. Now let's do the trial balance addition on the debit side. 5410 plus 6300 plus 320 plus 1650 plus 8000. So again exactly we get to 21,680 as the credit balance. Sorry, debit balance. So debit balance and credit balance are matching. So this is our post closing trial balance, and all other temporary accounts are gone. We have only the permanent accounts. So with this we have come to the end of the entire accounting cycle. Okay, so the objective of this playlist was to teach you how to do accounting cycle. So let me quickly go through the process once again. So I'll go back to the starting. Okay, so we started off with this page. Okay, so identifying transactions and recording transactions. So that is what we have done here. So after identifying and recording transactions, post into general ledger. So post into general ledger we have done here. So we have the permanent accounts on the left, temporary accounts on the right, except retained earnings, and we post it. And if you notice that the blue color pen entries were the first entries. So after that we created unadjusted trial balance, because we calculated the balances and we created the unadjusted trial balance like this. Now in the unadjusted trial balance, supplies expense was not shown, depreciation was not shown, insurance expense was not shown. So because these expenses are not shown, we need a adjusted trial balance. So for that we had this adjusting entries. Okay, so this is what is the fifth step, making the adjustment entries. So these are the adjustment entries. So after the adjustment entries are completed, these entries again posted back into the general ledger. So that we have done with the pencil. So now finally with the pencil we have marked the adjustment entries. Once the adjustment entries are made, then we got the adjusted trial balance here. So the adjusted trial balance is done. That is number 6. From the adjusted trial balance, if I take the revenues and expenses, I will get the income statement. And if I take the retained earnings, income, net income and dividend, I'll get the retained earnings statement. Now I got income statement and retained earnings statement. Then I'll get the classified balance sheet. So where we have assets and liabilities classified as current assets and property, plant, equipment, etc. Total assets and matching with the current liabilities, long-term liabilities and equities, etc. So total is again matching in both cases. This is the classified balance sheet. Once the classified balance sheet is done, then we need the closing entries. So how to do, why to do closing entries? Because we don't want to show these temporary expenses in the trial balance, because next month again we'll face these expenses, maintenance and repair, supplies, etc. So in order to do that, we have this process where you take service revenue into income summary, then expenses into income summary, finally retained earnings and dividends. So after the closing process is completed, again these closing entries have to be posted into the general ledger, that we have done with the red pen. Okay, you notice that on the left side there is no red, on the right side temporary accounts the red pen is there, and everything, all expenses become zero balance, and then finally the retained earnings is updated here. Now based on that, we created the final post closing trial balance. Okay, so this is the entire process of the accounting cycle. That is the objective of this playlist. So if you had followed up to here, very good. So I might make one more or two more examples on this from the time, but for the time being, this playlist I am kind of temporarily concluding, because whatever was my objective to explain accounting cycle in this playlist, that objective I believe I have completed. But maybe in future, if I have time, I will add some more example problems so that you can try them. But basically this whole cycle you need to understand, and that's what we have done through this particular problem 4.8 from the book. So again, those who are seeing this video, once again let me show you the book. So the book is Financial Accounting, 7th edition from Kimmel, Weigand and Kiso. This is the Wheelie publication book. So this book is available and it has hundreds of problems on this kind of problems. So only few problems I have taken from the book and I have explained in this particular playlist. So if you have liked this, please press the like button, and please subscribe and refer my videos to your friends and family, so that they will also get the benefit. Thank you so much for being with me until this end, the last video. See you in more videos later. Thank you.